Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. Well, it's Monday, April 4th, and Tesla has been surging all the way up. It's just amazing. It's interesting because it is now at a very critical juncture. It just moved above an alternative buy point. The actual buy point on this one is the actual buy point is 11. It is actually 1208, but there is an alternate early entry point at 11:45, and it just passed that. So that indeed is very, very interesting. So kind of wanted to talk a little bit about that. First of all, let's go to a slide. Basically, this is kind of the layout of Tesla. It's had this surge. It moved past this resistance, and that's very, very key. The resistance is about 11.45. It closed basically up $60, 5.61%. It moved right above 11.45. That is an alternate entry point, and it is moving up towards the actual buy point. The actual buy point on this one is 1208. So you could start building a position here. I definitely have myself been building a position here, and it's kind of looking it's looking very interesting. Let's kind of run down the indexes here, see how they're doing. Basically, we had a nice update today. The Dow Jones was up just slightly. S&P was up, but it's the Nasdaq that's really looking good. And if you have been following the ETF strategy, that is a strategy where you basically go all in on the QQQ when we come into a confirmed uptrend. I'm going to show you the results on that in just a second. But the Nasdaq's up very nicely, 1.9%. Now, of course, this is where all the techs are. But I think mainly the reason the Nasdaq has moved so well is because it's where Tesla is in. Tesla is in there as well. Also, Apple is very close to a buy point as well. So it looks as if people may be getting back into some of the tech stocks. That would be a great thing. With other news items, basically the 10-year Treasury yield rose about 2.41% on Monday. Now, because of this, we are probably going to see weakness in some of the bank stocks. The one I expect to get hit the hardest is BAC. I haven't really done anything on that, but there is a potential short on Bank of America, and I'll be hopefully having that ready for everyone by tomorrow. We'll take a look at that. On the U.S. oil prices, we have the oil prices jumped 4% as West Texas Intermediate moved above 104. Now, what's so interesting about this is if you've been watching me for a while, you'll know that I've been moving in very heavily into the oil patch with oil stocks. I did buy an interesting stock today called Neighbors, and what it is it's a drilling company in that area. It tends to be doing well. This is my second driller out there. I also want to show you an interesting chart, and this is the chart of natural gas. Now, why is the natural gas so important? Why is that chart so important? Why are we looking at it? Well, it is a precursor of inflation. All right. Part of we always look at the oil price. We know that anything above about 85 in the oil prices on the West Texas Intermediate is going to be inflationary. But we also have to look at natural gas, and the reason we do is because most of our electricity, at least here in the United States, is generated with natural gas. So any trend that moves natural gas higher means higher electricity prices and potentially higher utility bills. So this is a very key chart. Just wanted to kind of point it out to you. One of the interesting things about this chart is that it has moved with what they call the golden cross. Now, why is that so important? Well, what that means is when the 50-day line moves above that 200-day line, that is bullish for the price of natural gas. And because of that, I believe we are going to see, at least in the near term future, we're going to see a rise in all costs related to natural gas. And one of the biggest costs is electricity. So unfortunately, this summer, electricity rates are going up. I mean, I'm just looking at this chart tells me that. I mean, we possibly are going to have over $6 natural gas. And remember, the last time that happened, basically, we had a huge spike in utility prices. So not looking good for the inflation situation, but looking great for some of the natural gas, some of the natural gas companies. Now, I want to show you a stock that I've been going over a lot of stuff here, but I want to show you a stock that I did sell today, and we did sell it at a gain, a very nice 5.91% gain on this one. We held this one for about 32 days. It's Berkshire Hathaway, and basically the way the strategy works is we buy them as they come out of their bases, and then move that stop loss up. When the thing pulls back, like this one did, then we sell out at a profit. Today, some of these stocks moved. The Nasdaq moved much stronger today than the other indexes. So Berkshire was down, but we made a nice profit on it. So very happy to see that. Now, taking advantage of this swing into Nasdaq, into the profits for the Nasdaq, we have, of course, the ETF strategy. And this is a strategy that I employ for my ready cash. What do I mean by ready cash? I mean cash that I'm going to be using basically in 180 days or less. This is cash typically for taxes and on the real estate that I own and other ready cash needs. I like to invest this, and I like to invest this in a way that I can make a little bit of profit on it. Now, with this ETF strategy, the market confirmed an uptrend on March the 16th, and that's when we went all in on that confirmed uptrend in our cash accounts. The advantage of that, what happened was, as we went all in, you can see the results of this play. We are down a little bit today. The Nasdaq has pulled off a little bit, but basically on a yearly basis, it's gained 5.995% since we went into this. Since we went into this on the 16th of March. This is a great strategy to use for your funds that you need possibly in relatively quick time, because the QQQ, which is what we use, is a very, very liquid fund, and it can be traded 24 hours a day. So kind of an interesting way to go there. Here's a stock that I bought today. I was talking about stocks that might do very, very well in an environment where we're going to probably see some more production of oil because, of course, Biden released some of the oils from the Strategic Reserve, which is crazy because we literally have all the oil sitting right in Texas, Louisiana, Oklahoma, a lot of other places. It's just there ready to go. My guess is there's going to be a lot of demand for drilling services, and drilling services are basically companies that come in. They don't own the wells, they don't own the production, but what they do is they do the drilling. Neighbors NBR, one I did buy today, and it's up about 1.29%. The one I did buy today was looking very good, coming out of a very nice base. There are a number of others in the area. HP, Hemrick and Payne, that's another drilling company, not the electronics company. That one is doing well. It just is not set up as well. So this is one of the ones that I did buy in anticipation of a very good potential move in the oil and gas. Now, even though we have a lot of, I like the tech area, it's been the oil and gas area that's really, really worked well for me. Here's the performance of my small portfolio. This is a demonstration portfolio that kind of shows you how I'm trading an amount that's relatively small, and it gives you an idea of how much I'm making in each stock that I'm in. Currently, Hess, which I've had for 18 days, it's up about 6.43%. Arista Networks, this is one of my few tech stocks. It's up 9.65%, about 18 days, same amount of time. St. Joe Company, this is the largest landholder, residential landholder in the state of Florida. It's up about 2.93%. And of course, Tesla, I just bought that one today for the small portfolio. We got it at a pretty good price, $1,089.50. It's closed at $1,145. And of course, that is the alternate entry. So that's kind of a key level. Quanta Services, this is another of the drillers, sort of like the one I just showed you, Neighbors. This one is a relatively inexpensive stock. It's up about 1.45%. Now, not everything, of course, worked out. I bought Sinclair Oil yesterday. Symbol is Dino, D-I-N-O. That one's down a little bit. I think that we will do better. That is a the company that is being consolidated, and that you might want to take a look at that one. DINO. That's an oil company, and I do think it's likely to go higher. Golden Ocean, of course, is my very small position, and it's a very, very small position. And this is a shipper, and it's down. It's down about 5.8%. So that one isn't doing as well today. But without further ado, let's get into some of the questions. Well, let me share for you everything that I own across every platform. Basically, we did get out of Berkshire today. It did drop. We sold it as it moved lower. We're in Quanta Services, Hess, Arista Networks. Of course, the QQQ, that's the Invesco Trust. That's up significantly, almost 2%. That's a good way to get exposure and not have to pick stocks. Juniper Networks are down about 4 cents, not a lot. St. Joe Company, we talked a little bit about that. OVV is another one of my oil stocks, and it has been doing well, but it's down today for some reason. Don't know why. Marathon Petroleum, that's another really good stock that I really, really like. Why? Because they produce diesel fuel, and diesel is going to be very, very short in the near future. Why? Because everything that in your stores, everything is arrived by truck. It uses diesel. Diesel is in short supply because of the mix of some of these refineries. So I'm looking for companies that make diesel. One of the two relatively smaller companies that are in the diesel business are MPC, Marathon Petroleum, MPC. By the way, there's two symbols on Marathon. MPC, Marathon Petroleum, that is the refiner. And then also the other one that I'm in, of course, is Dino, which is HP Sinclair. And that just merged with a company here in Dallas, Apache. So that one's off a little bit, but they do manufacture aircraft fuel and diesel. And that's what I'm really interested in, is the diesel. And of course, Neighbors Industries, and that's a driller. So I'm pretty weighted heavily in some of the oil and oil-related companies. So thank you for holding on there. I'm going to get to everybody's question quick as we possibly can. And thanks, John. Let's look at Bank of America, BAC. This is one I'm interested in shorting, by the way. I haven't done it yet, but this one is a very weak, and I want to show you how weak this is. You're like, what? Bank of America weak? How could that be? Well, it is. It's absolutely very, very, very weak. If you'll notice, we have the 50-day line is moving in the direction to move below that 200-day line. When that happens, that's called the death cross, and it's likely to go lower. We're seeing a lot of weakness as they raise the interest rates. This company could be a setup for a short. I suspect it to short. I suspect it to rally probably tomorrow up to about this level, which is about 42. And then I think it's going to move all the way back down to about 38. So I think that there's a good likelihood that we're going to see it drop probably to at least this support level and maybe lower. Bank of America is very, very weak, believe it or not. And it may go actually lower. So not something that you want to do. It's not something you want to be in. Let's take a question from somebody that is coming in on on TikTok. Buy calls on Meta. Well, maybe. I am not a bull right now in the tech sector. Why? Because Facebook and the others, it's not that they're not good, it's just that they are not in sync with the market. Now, it has been coming up off the bottom. Let me show you the chart on this one. This is for Meta. So this is the chart for Meta, which used to be called Facebook, of course. And this is Facebook. That's still the symbol, FB. But and it is starting to make a move. It is starting to make a move, and it's definitely moved above that 50-day line. The question is, can you buy it here? Well, here's the thing on this: I wouldn't buy it until it moves at least above the 250 level. Okay, I just wouldn't. Why? Because if you remember when we had that earnings disappointment back in January, about January 31st, and when it moved down, that's where it started its descent, and then it's gone all the way down. So until it moves above about 250, I would be very, very careful of it. So I probably would not buy calls on this one. We'll see if it can hold the 50-day line. Maybe you could buy that. I just don't like to buy anything that is below that 200-day line. So I would not be a buyer of calls here. I mean, obviously it's, up to everyone. But I personally, I wouldn't be a buyer of calls for Facebook. And the reason is just it's just the way the chart is set up. It really needs to move above about 250 in order for it to even be considered as a good trade. Now, I did make a little bit of money. I had an iron condor on this one, but I closed it at a profit as it started to rebound. Until Facebook hits about 250, I just think you just got to sit and watch it, because it just doesn't look as good as we would like it. The checklist on Facebook, it's still pretty good, 67%, but not really good. It's not as good as I would like to see it. That's for sure on Facebook. Let's see another question. Thank you. Let's take a look at bank. Oh, we did Bank of America. All right, great question. Thank you, Drunk Squidward. CMI. And is this a buy with diesel fuel prices rising? I think you're definitely on the right track here. Diesel is a very key index. The price of diesel is a very, very interesting telltale sign. Now, here's the thing about Cummins. They make the engines. I don't necessarily think that the engines will be. I don't think the engines will be where the action is. I think it's going to be in the fuel companies. That's where the action is going to be. So right now with Cummins, and it's below that 200-day line, I just don't think it's a good buy in this situation. And it also has a terrible checklist, 33%, not looking very good, unfortunately. Just don't want to buy a stock like that, because it is moving lower. Now, there is a play that you can employ that does make sense in an environment like that, and that is the biggest of the old bigs, and that is XOM, ExxonMobil. Why? Because they're huge, and they make basically lots of diesel. So and they have a lot of places that they sell it. So this is potentially actionable here. I want to show you the reversal line on this. This is the reversal line that I'm drawing right now. And why am I doing that? Well, I think that it's pulled back to the 21-day line here. And this is a place that you could possibly buy ExxonMobil. God, I never thought I would recommend ExxonMobil, but let's look at the monthly chart. On the monthly chart, you can see it's coming up right to, it hasn't been at this level. It literally has not been at this level since back in 2017. That's amazing, because 2017 to 2018, this is when a recession hit, but it hasn't been this high. So I think that now We're starting to see a lot of inflation come back into the market, and this might be a great place to buy Exxon of all things. I currently don't own Exxon. I own Hess, but I'm thinking very, very strongly of making a buy on Exxon. Why? Because they have excellent numbers. Look at this. Their sales are moving up very nicely. Their profits are just off the charts. And look at this. It's got a return of equity of 14% and a 15 PE. Here's the thing. It's true. There's a lot of companies out there in the tech land that you're buying that are potentially good values, but they all have PEs, some of them north of 100. Why buy a stock like that when you can get, basically in this environment, when you can buy a stock like Exxon that has, tremendous return in terms of its cash flow. Look at that, $10 on its cash flow, and it's an $83 stock. So what I'm saying is that I'm not saying you want to put all your money here, but this is a very safe buy in terms of diesel. And remember, it's going to be the fuel, I think, that's going to be the most expensive thing really going on. It's going to be the fuel. And so that's where you want to concentrate on the large integrated, the large integrated companies are probably going to be very, very good, at least for the current time. All right, so let's look at PDD. Thank you for that. Let's pull that up, PDD. And there we go, PDD. It's come up in just a second. Pinduoduo. You know what? The Chinese companies are starting to look better. I'm not in any of them because it looks like they may comply. That would be a great thing with the U.S. regulators for accounting standards. If that is indeed the case, then they won't get delisted. But here's the problem. You're buying, essentially catching a falling knife here because this stock has gone down. It's under the 200-day line. It's come up to the 50-day line. So I don't think it's necessarily a bad stock to buy, but you know what? This is not a buyable stock. I think this is a watch list stock. So, this is just not buyable right now. Watch list it. And that's kind of frustrating. That's one of the things that, I had to learn, trading, is that, a lot of the times the best investment is no investment. Yeah, this one is one of the ones that I think that, it could hurt you because it's still in a downward trend. So I just would not be a buyer of Pinduoduo. I just wouldn't be a buyer of it right now. It just doesn't look good. And I wouldn't be a buyer of it. Let's look at let's look at Tesla first, because that's really that one is bucking the trend. TSLA, of course, is the symbol. We talked a little bit about that a few minutes ago, but as you can see, I have a pretty marked up chart here because I definitely like Tesla. I've been trading it for quite a while, as you can see with all these markups here. We moved above a very key level, and that is this 1145. Now it's sunk back a little bit in after hours, but this is an alternative. This is an alternative buy point. As you can see, and let's see if I can put this up here. Oops. Let me see if I can put it up correctly. There is a little handle here. Yeah, there we go. There's the little handle, and you can see as it pushed above this peak of this handle, this is where's the place to buy it. Basically at 1145. That's kind of the one of the better entry points for for the stock. So I definitely think it probably will pull back a little bit tomorrow, but I think that this is buyable, and I definitely bought today. I've been increasing my position, as you can see, hoping that it would move above this, first of all, this reversal line, and it did, and then with strength above this next little level. The next important level is right here on Tesla, and that is at 1208. So what I would consider with this one is that right now the next buy point for Tesla is is 1208. So that's a key level. That's a very, very key level for Tesla. If it can move above this and stay above this, and why is that the buy point? Well, because back here in the beginning of January, it achieved this level. So now it has completely based. It's come all the way and based all the way out, and now pretty much all of the what they call overhead supply has been taken out. Overhead supply are people that bought higher and then it moved lower, and now that it's coming up, they're selling. So there's going to be fresh buying above this level. So I think that basically, if it moves above that key 1280, that's another buy signal. I'm going to be moving in even more if it moves above 1280. I mean, it goes about 1208. If it moves above 1208, I'm going to be moving in more than I am currently. I've been buying it, but if it moves above 1208, I will buy more, definitely more. Right now, if you look at this 89% checklist, which is really great. By the way, of course, they did exceed their deliveries, which was incredible. And they just this may be one of the great companies of all time. The question is buying it at the right time so you don't get shellacked when it pulls back. But there is a definite buy point on Tesla at 1208. Taking a look at their sales, Tesla's sales have been just going up beautifully. Any company that can increase sales 20% a quarter, and of course Tesla's doing much better than that. With these kind of profits, I mean, literally, if they get to scale, they just print money. The problem is getting to scale, of course, with the problem with the shutdown of the Shanghai factory. But now with the new Giga Berlin factory coming on, I don't know. It's going to look pretty good for Tesla. Can you buy it here? Absolutely. I'm buying it, and not a recommendation or anything like that. But I think that yes, it moves above 1208. That's a significant buy point, and I think at that level we can really do some damage in terms of making money. I think that really, really would work really, really well. All right, let's look at Qualcomm QCOM. That's probably, thank you much, Pritesh. QCOM. And let's take a look at Qualcomm. All right. Qualcomm, unfortunately, I don't like as much as Tesla. There's nothing wrong with Qualcomm. It came up through this consolidation. It moved above the buy point, but it has been moving lower. I think you need to see some support. Probably we're going to see some support at the 40-day line. So let me just take a look. Yeah, at the 10-week line, there's support at the 10-week line. We're right below that. You probably could buy it here. Here's the problem. Here's what I'm having a little bit of a problem with Qualcomm. It's not Qualcomm. It's the group. It's 60th out of 197, which is good, and it's getting better. But why not play in an area that is going to give you better results just from anything you pick? What I'm going to show you here, of course, is the industry groups that I am looking in for my buys right now. And that basically is in the oil and gas area still because, we have inflation raging, unfortunately. And the best thing to buy in inflationary times is oil because it's used in everything. So what's the best? What's the best? Well, the best right now is the international E&P companies in the oil and gas area. That's the number one area for for the market right now. And look at this. This is the entire group. It's got a 99 relative strength. Let's take a look at kind of what's in there and what's the top stocks are. Well, we've got one of them that I have, EGY. This is an interesting company because it's not very expensive. That's number one in terms of its strength. It's got a 99 relative strength. I also own OVV. That's Ovid. That's 99 as well. I don't own Oxy. This is the one that Warren Buffett owns a lot of. And I don't own Murphy, but I do own Hess. So I own a lot of them in this group. Now, just want to take a look-see at Oxy to see kind of what's going on there and see if that's viable. I don't think it is based on what I'm seeing. So these international E&P companies, they seem to be doing well. Now, let's go back to the daily chart on Oxy to see if there's any entry point there. Yeah, as you can see, this is where I sold. Interestingly enough, I bought it and then I sold it. I'm waiting for a pullback to the 21-day line. So basically what I'm doing here, I'm just going to edit this a little bit. I'm looking for a pullback to the 21-day line. So right now that's at about 54, I believe. Let's see if that's going to see pullback to 21-day line. And this might be a good place to buy Oxy because it's going to bounce off that 21-day line. It didn't work. All right, let's try it something else here to make sure, see if we can get that to work. Basically, on the 21-day line, this is where you want to buy it. Right now, it's about 4% above that 21-day line, but as it pulls back to 55.50, that's where you want to buy it. So what I'm going to do here is I'm going to edit this, and I'm going to put in here 55.50, and that's going to be pullback. That's going to be a pullback to 21-day line. Possible entry. So this is a possible entry point on the 21-day line. Well, let's do that. Okay. So this is a possible entry point on the 21-day line. So what we're looking for here, now it's up a little bit after hours, is a pullback to about 55. That's where you want to buy it. And you can do very well on that. That is, of course, Occidental Petroleum, Oxy. So I'm sorry I didn't cover Qualcomm more. I just think right now it's a time to be careful with many of the semis. What I'm doing instead is I'm buying the QQQ because that's agnostic. I can just buy the top stocks in the NASDAQ. So that's sort of what I'm doing. I think this is a better investment right now than some of the chip stocks, is the QQQ, because it covers everything. And as you can see, it's moved up very nicely. If it moves above the 200-day line, I think that it's going to start looking good. As you can see where I started buying it here. So that's kind of a long and a short. Let's take a few more questions from TikTok, and then probably that will be it. All right, should I buy Tesla now? I think you should, but my opinion. And again, there's no right and wrong answers, but I'm buying Tesla. That's all I can say. All right, let's look at UNG. This is probably the last one we'll have today. That's United. Oh, this is great. Oh yeah, very, very good. Very, very good one. This is the gas fund. This is the ETF. Now, this is a way you don't have to buy, and this is great because you don't have to buy any. You don't have to guess with this one. Well, who's going to be the winner? Who's going to be the loser? Because it's really, natural gas is a commodity, but UNG is a good buy. UNG is viable. So I think it is viable, and part of the reason I think it's viable is because it is right below the pivot being at 2210. It's currently at 2022. It's up after hours. Nice movement here. We're pretty close to the 10-day line. Let's take a look. Yeah, we're 4% above the 10-day line. I think this is very, very good. This is trending very nicely. And remember, this is an ETF. This is not an individual. This is not an individual stock. So it covers the entire waterfront here. So I definitely think UNG is viable at this level. I think it's a good level for it, and I think it's doing very, very well. All right, so that's looking pretty darn good. Well, thank you everybody for taking. Oh, wait a minute, a short squeeze is imminent. Okay. What do you think of GameStop? And the I think the meme stocks maybe, but not so much. I would be very careful buying GameStop here. All right, and so how much do you think Tesla can go up to 1,500? Absolutely. The question is, it's got to clear the key for Tesla to make new highs is it's got to be able to It's got to be able to punch through the 1208 buy point. But I definitely think that Tesla is moving higher based on their deliveries, and it's looking fairly bullish at this point. I mean, I think they have sort of overcome a lot of the issues in technical issues in terms of the chart. So it's looking very strong. We're starting to see, the 200-day line is pointing up, the 50 days pointing up. It's moved past the resistance point at 1145, moving towards the first key buy point, which is at 1208. So it's looking very, very good. So hopefully that it will keep moving. It probably, we may get a little bit more of a pullback and then a movement higher. But let's look at the 10-minute chart here. Yeah, it's just there's some large buys at the end of the day. So I definitely think that we're going to see some more action. And I think it'd easily be 1,500. There's some analysts out there that have said that it's easily possible for Tesla to move all the way up to 1,500. Well, thanks everybody for taking a look today. So appreciate it as always. If you're not, let's see if we got one more question here. All right. Oh, we want to take a look at Amazon, and let's look at CRM. CRM of course is Salesforce. CRM. Let's take a look at it and see if we could come up with a good answer here. I'm going to go to the daily chart. I was on the 10-minute chart for CRM. CRM. Here's the problem with CRM, and this is a problem not just with CRM. There's a lot of stocks in this same problem area. The problem is it's below that 250-day line. I just don't think it's a good buy here. Maybe you can get it off the bottom. You can take it off the bottom. I mean, it's a good company, but I just think it's death. I think it's just death. I think you just got to wait on CRM. You just got to wait on it because it's below that 200-day moving average. And the 200-day moving average, if you look at this very carefully, you'll notice that it's pointing a little bit down. When the stock is below the 200-day average, and the line is pointing down just slightly, well, that means that capital is flowing out of the issue. So I would not be a buyer of CRM. I would not be a buyer right now of that. I wouldn't be a buyer. All right, Kevin, thank you very much. Where do you see the SPY with the Fed meetings released? Who knows? I mean, it's tough with the spider because the spider covers so many issues of stock. It's coming up to a buy point. So technically, it's looking fairly good. Now, one of the good things about the S&P 500 is that many oil stocks are in there, and I think we're going to have a lot more inflation. I'm not happy about that. Believe me, I am not, because my little Honda costs, I drive a little Honda, and, it cost me like $45 to fill the tank. I mean, if I had an F-150 or something like that, I'd be in trouble. But I think that oil is going higher, so I think that the S&P 500 probably is going to go higher too, because many of the stocks that we're talking about here, many of the oil stocks, they're in the S&P. So is it likely to go higher? Well, so it's sort of a mixed bag. It's true, most of the stocks in the S&P 500 are banks. And I don't think banks are going to do well with these interest rates going up. I just don't. Bank of America is very, very weak now. And I just don't think that they're going to do as well. So it's sort of a mixed bag with the S&P and the spider. Here's the thing about the spider. I think it's going to trade right at the 10-day line. So let me take a look and see where that is. Yeah, it's almost on the 10-day line. I think it's going to be on the 10-day line. So I'm not as bullish right now, on the overnight. I think it will do fine. I don't think it'll drop that much, but I think that, it's not going to do as well as we would like to see it. So I'm not in the S&P, but I'm in some of the S&P components. Let's look at AMD, and that'll probably be the last two. AMD. I don't know if you saw this, but there was a very nice iron condor that was put out on AMD from Gavin McMaster. If you don't follow him, I really recommend it. If you're a subscriber to Investor Business Daily, you might want to take a look at some of his columns because he has a lot of insight in terms of options. He's really an expert in that area, and he does have an iron condor on AMD. And what does that what does that analysis tell us? Well, it tells us that you use an iron condor when you're expecting a lot of volatility. So here's the thing about AMD. It's trading below the 200-day line. It's very volatile. So I wouldn't buy the stock outright. I would consider an iron condor because I consider an options play on this because of the volatility. And that's the thing about AMD right now. So I would not be a buyer of the AMD shares, but I might very well be a buyer of the iron condor on that. All right, last one, MATX. MATX. Let's take a look and see. That's Matson line, and wow, it just dropped off the face of the earth. Look at that! Wow, this is why you want to have stop losses. By the way, this is why you want to have stop losses. It was all the way up there at 120, and now it's all the way down. What happened? I don't know. Boy, help! I've fallen and I can't get up. Boy, that is not what you want to see in a chart. This is why everybody. It's so important, and this is what I do. Is as the stock moves up, and sometimes you're going to miss out, but as the stock moves up, you just want to keep pushing that stop loss up because these things happen. And as you can see, we're doing great. Basically, we were doing great until Friday, and then just all hell broke loose, and it's just not looking that good. They must have had a bad earnings report. I'm just trying to find out why the drop here. Well, it doesn't look, I don't know why. There's interesting. The earnings are due on the 27th. So it wasn't earnings. I don't know why this happened, but the profits are moving up very nicely. Somebody big sold. Somebody took profits here. Some big fund basically said, I'm going to sell and take the profits with me. So I can't. Yeah, look at that. So we have definitely increasing selling action going on. Boy, you know what? I've got GOGL, so let me just take a look at that. Maybe I should sell that. That's an interesting in the same area. Yeah, that pulled down too. So definitely, I don't know, up after hours. I bought it a little bit better though, and I do think this one's going to turn around. But wow. So we may be seeing some weakness in the shippers. I'm kind of surprised at that. Is going on. But thanks for bringing that up, Matson lines. And so some seem like the shippers are having some issues. I can't figure it out, but I'm not in it. But I'm in GOGL. So one of the things, and this is a very, very key thing, and this is the thing you always want to do is if when you buy a stock, you can't tell when, especially in this market, when it will move lower. So what I do typically is, I'm always looking to push my stop loss up as much as I can. So every night I go through and I think, oh, okay, well, I'm going to push this up like a little bit higher, so that if you come into a situation that we had with Matson where it starts to fall, you're out, and then it falls further. So remember, always do your stop loss, and typically as it's moving up, if it's moved past break even, you want to push it up even further. But initially, when you start, put it in at about, 2 to 4% below where you bought it, and then as it moves higher, if it moves correctly, push that stop loss up so that when it pulls back, you won't be caught losing capital. All right, thank you so very much, everybody. I hope you're on the Action Trade Alerts. Super easy to do. If you're not, just go to www.dallastradingfloor.com. Just give me your first and last name and an email address, and you'll get on there. It's free, so that's kind of a good thing. And I'll be back tomorrow at 5 after the show. Also, if I could bother you, please like this show, because by liking it, it helps me get out there to more people. And we have a lot of people on TikTok and YouTube, and we're growing all the time. So please like it, and so more people can see the show. I try to give you how I'm trading the market and buy points, and I try to answer as many questions as I possibly can with the charts and trying to give you a chart analysis of your particular stock that you are trading right now. So without further ado, thanks, and I hope, oh, wait a minute, last question. Any thoughts on crypto? Just take one quick look on the crypto. Here's how I have been trading crypto a lot as of late. I've been mostly trading the oils. But there is a way that I like to look at cryptos, and that is with the GBTC. This is the grayscale Bitcoin. This is the grayscale Bitcoin cross the symbol GBTC, and this is approximately 4% of the world's supply of Bitcoin. Believe it or not, is contained in this ETF. Very interesting ETF. Now, here's the thing about it: it is sort of making a turn, but it is still under that 200-day line, and we do have the death cross on it currently. Bitcoin started weakening basically right about the second week of January, and then it's been weak, and then it's starting to make its move up. I want to see this thing trade, the GBTC trade above about 35 before I'm starting to get more interested in Bitcoin once again. So that's sort of the crypto. That's sort of my crypto second. That's how it trades. But I want to see with one of the ways that I trade crypto is to trade two ETFs. One is the Grayscale Bitcoin Trust, and the other one is Ethereum ETHM, and that's another ETF that holds about, I think, did I get that right? I think it's E or T. Okay, is that right? ER. Oh, anyways, I can't. Anyways, I mostly trade the GBTC, which is 4% of world's Bitcoin. So, and right now that's underneath the 200-day line, so not as excited. Waiting for it to move above that level. So, without further ado, I will see you back here tomorrow at 5. Happy trading, everybody. Stay safe.